Question C asks you to discuss which one enhancing qualitative characteristic of the conceptual framework for financial reporting could most likely be compromised based on different correct accounting treatments. So this last part should already give you a tip in terms of what enhancing qualitative characteristic you should write about. So the correct qualitative characteristic that you should have discussed is comparability. Because even though the accounting treatment by each football club is correct, it would be difficult for a user of the financial statements to compare these two football clubs because of the fact that the treatment of the same type of contracts is different. Question D is about events after the reporting period. It asks you to classify this transfer payment event in terms of IAS 10. So you have to go and determine whether it is an adjusting or a non-adjusting event. In the information that they give you, they say that you should assume negotiations for a player transfer between the two football clubs commenced prior to the end of the reporting period of the two football clubs. The negotiations were only finalized, a new contract entered into, and the transfer fee payment made after the end of the reporting period, but before the financial statements were authorized for issue. So firstly, you would have to have written the relevant theory, which is the definition of events after the reporting period, as well as the definition of an adjusting event and a non-adjusting event. You should then go and apply the theory by stating whether you think it is an adjusting or a non-adjusting event and why. Many students confuse the event with the condition. The event is after the reporting period. In this instance, the event is the transfer fee payment made. The question you should ask yourself then is whether you should have recognized this payment in the prior year of assessment or in the current year of assessment. This depends on when the condition started to exist. So, did it exist prior year end, or did it only exist after year end? If it is before year end, it is an adjusting event. If it's after year end, it is a non-adjusting event. In this scenario, the negotiations for a player alone is not enough evidence that the condition existed prior year end, because even though two parties are negotiating about a contract, one of the parties can still decide not to enter into that transaction. So only when the new contract has been entered into and the transfer fee payment made does the condition exist. And this only happened after the end of the reporting period, which means that this is a non-adjusting event.